Hello, fellow traders. Tis TheRumpledOne coming to you on Wednesday, December the 28th. The year's 2022. Let's talk trading. Managing winning trades, part 2 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, so you're in a trade right now.
Yep, and it's not a winning trade. It's actually gone against me, and for transparency's sake, I'll admit it. I went into this trade because I knew it was going back down to 75. Well, guess what? I was wrong.
And you might not be wrong. We'll wait and see.
Potentially, right.
It's a matter of time.
Exactly, but it just it went against me, and it's way to actually hold on once again. I had the opportunity to get out. I didn't get out. Shoot. Oh, well, that's okay.
Well, gap down. Where do you need to get to?
I'm right at break even right now.
Okay,
I'm getting out. And it probably stole like a pip or so from me because it jumped right back up as soon as I hit the exit button. But I was in profit there for a second. But that's part of trading, You can't get upset about it. It's, because I think what happens is when the moment you get upset about it, you're done. It's an emotional thing and plays with your psyche, and and you just have to move on. Yeah, I just looked. I was actually up a pip, 1.2 pips, and I got out, and it looks like it took 1.2 from me. So it actually moved it 2.4 pips. The time it took me to get out.
Wow.
It's like, what am I going to do? Move on with life. But that's part of it. It's funny. We're talking about managing your trades or managing your wins or however you want to say it. Well, part of managing your wins is also managing your losses because, that may sound cliche or whatever, but the reality is if I don't have the right attitude right now with taking a loss or losing trade, then the reality is what's going to happen is it's going to mess me up on the other end, because now let's say I went into another trade here and I was, because I would have had a trigger to go south at 84.6. And if I would have taken that trade, and I would have been, right now, if I had taken that trade, I would have been up, 3.5. At one point, I was up as much as 4.5 pips. But if I let that stuff that happens prior affect me, I'm gonna do a couple of things. I mean, I could go and just get so frightened that I'm not gonna, I'm so frightened out of my trade that I'm happy to get a 1 point win. Yay, I got a win. I got a point. Meanwhile, I just went and took a 2.5 pip loss. It's like, you can't let that affect you. Or the worst thing is that you sit there and you look to the left and you realize that, hey, we've now hit a point with a real big contention. We've hit a floor. Get out while you can. Take your profit. And be happy with it. And the next thing you know, you become greedy. I got to go and win what I expect to win on a trade, plus what I lost on the last trade. And so you're no longer managing your win, you're managing your emotion from your previous trade, and then it'll just set you up for failure.
Yeah, exactly. But for the data, you've got your bucket load of pips, right?
Yeah, I do. I mean, I'm up, at this point in time, I'm actually up 38.6. So I've more than made my what I need to make in a day in terms of pips. So I'm happy, but even if I was, in a situation where I was down, I have to, it'd be a whole lot harder to be happy about it, but you have to be, you just have to realize that, it's a market, and it's a market. Sometimes you win, sometimes you lose. It's sort of like, some of the traders out there know this about me because I've talked to them privately when they've reached out, and they know that I lived in Africa for a number of years, And and the way that you go and buy food and such and everything there is totally different. Yeah, they got supermarkets, but they never have anything that you really want, and the quality is pretty low. So you want it going into the marketplace. You literally go down into a market where there's literally hundreds and hundreds of vendors out there, and they've got their wares out there, whether it be anything from an iPhone to a tomato. I mean, it's literally out there, out in the open market. And what happens is you go out there, you negotiate the price that you want to pay for something, and and here the reality is when you get home, sometimes you have buyer's remorse. That tomato that you bought that you thought was perfect, all of a sudden you get it home. By the time you get it home, it's like, oh man, look at all those blemishes, look at all those bad spots, look at all that whatever that I couldn't see. And probably couldn't see because of the negotiation that was going on back and forth. Because over in Africa, when you go and buy fruit, it's not just go out there and buy fruit. It's not like the United States where you walk into the supermarket, you pick up 4 tomatoes, and you throw a $5 bill down on the counter. It doesn't work that way. No, you go over there, you have a conversation with the person, you talk about the tomatoes, talk about how they got grown, you talk about all types of things that you wouldn't think that you'd ever talk about, and then you'd start off with a price, he'd come back with a price, and you go back and forth for another 5 minutes, and 15 minutes later you're walking away with a tomato in your pocket. And so there's a big investment there. Well, I think there's I tell that story because I think there's in terms of trading, we have a big investment a lot of times when we get into a trade. Sometimes we're in there, there are trades I've been in for 2 seconds or less. But most trades you're in there for, a minimum of a minute or two, and that minute or two can be quite an investment of your, of who you are in terms of emotion and psychology and all those things that go into building whoever we are. And so you can easily wind up with that buyer's remorse, like, oh man, I was up 5 pips and I jumped out, and that thing went, as you like to say, Kiara, put another 15 trip on the bucket, on the buffet.
Yeah, I know. That happened to me yesterday. I think I even texted it to you. I got out with the profit, and then they brought out another 5 shrimp. I was a little upset.
Yeah, but that's the reality of an open, free market.
Right.
Nobody went and bent my arm and said you need to go short there.
Right.
Okay. Nobody bent my arm and said get out there. That's just the way it is, and we have to take responsibility for what we did. And when we take responsibility for what we did, hey, things are good, and because and the reason why I think that things are good is because what happens is over time we become better traders, we become stronger in what we do, and we make better decisions, and we're not clouded by as much emotion. We go and take the shorts when we're supposed to. When we're supposed to, we take the longs when we're supposed to. We take our exits when we're supposed to, and that's the most important part.
Yeah, because it's funny. Yesterday I realized something about myself, something I probably realized before, but I get out of a trade and I just want to jump back in and make more pips as opposed to, waiting 5 minutes. Hey, Walmal, looks like we might go down to that 75.
Yeah, I knew it was going to get down there.
There we go.
Bam, I hit it on my chart.
Yeah.
It bounced off of it.
It sure did. 2 pip bounce.
Yeah, but it's like, now I can be really angry that, that I sat there, because my entry was actually at 82.
Mm-hmm.
So that would have been a nice little, 7 pip trade. And I could be angry that, I could have had 7 pips there, and instead I went and took a pip and a half loss.
Well,
I got.
Actually, it's worse than that because it hit 77. Had you waited, you could have picked up, somewhere on that trade. Then it went up, and you could have re-entered at your 82 on a
Right.
bearish M1 and gotten your 75.
Yeah, absolutely.
Because we know the price doesn't move in a straight line. It goes up and down and up and down.
Yeah, some people call it sideways. It's moving sideways.
No,
the
no such
reality is,
thing.
it's moving up and it's moving down, and that's the difference I think between us being, day traders slash scalpers, whatever you want to call us, that's the difference between us and say somebody who is, a long-term swing trader. Because yeah, I can understand why they call that, moving sideways, because in their scheme of things, if it's not moving 10, 15 pips, it's no consequence on their chart, because they got they got their stop loss 100 pips away from where they're at, and they've got their TP 300-400 pips away. So a movement of 2-3 pips, 5 pips, 10 pips is nothing to them.
Yeah, well, I'm more exact. It's either if it goes up even a point or down even a point, that's movement. That's the pure definition of movement. So all this stuff about moving sideways is just like, no, it might be moving within a range, but this sideways, I just don't buy it. But anyway, back to managing the trade. We talk about like three things that are important in trading. Our system or method, our brain, and what was the third one now? The money. Which and so when we're in a trade and we're managing the money, there's really three things we're managing. One is the money, but the other is our brain once again, and the other is looking at the chart and looking for signals to either stick or exit. And a lot of times you start to lean heavier on one than the other two. And so you have to see which one are you leaning the heaviest on, and then maybe try to put things back in a more balanced perspective.
I would agree with that. For me anyway, and I think this is true of most traders, that my biggest detriment is my emotion. I get I get heavily invested emotionally in a particular trade, and so it's sort of like in the beginning when I would take a loss. Was sort of like I just had a brother or a sister die on me. It's like, and you can't do that. Your investment emotionally should be investment in you, not investment in the trade. And I think that's the psychology that needs to be employed there. In other words, fine, things, you have to have the right attitude. And I know it's hard. You have to have the right attitude of things are not going to go my way every time. In fact, they may not go my way most of the time. Hey, you can still be a good, profitable trader. It's just you got to go and you have to go and sit there and manage that emotion, in such a way that it becomes something that's positive for you. And I think once you do that, a lot of things become a lot easier, because then you can be looking at the chart and you can be rational about what's going on. You and I, Tiro, were in that trade earlier last hour, and I had gone short and it had gone against me, and I wasn't upset, emotionally. In fact, it had gone against me at one point in time, probably 12, 14 pips. It had gone against me, but because I wasn't, looking at things and getting all upset about it, I was looking at it, trying to figure out, okay, when do I get out? When, we talked about this a week or two ago. Well, you got different options that are out there. You can get out of the trade, just take the loss. You can go and stay, you can stay in the trade and maybe average in. You can go and potentially go and reverse on the trade and stay in the trade, or you can reverse on the trade and get out of the trade completely. And what I did was I chose to go and stay in that short trade, because I really, looking at the charts, doing my research, I felt that it was going to come back down. And the main reason was because of we had so many M30 candles in a row. It was like 7 to 8 M30 candles in a row. And it's like, okay, we're due for one of these candles to have to go and cover itself. And, lo and behold, we got 2 in a row that covered. But, that's why I was pretty confident in trade coming back. But at the same time, hey, what if it doesn't? I need to go and basically protect myself. And so what I was able to do was I went to the reverse trade, because I got a signal for a reverse trade. And then what I did was I got the signal for the reverse trade. I then stacked on that reverse trade. And I stacked on a second time on that reverse trade as it went up.
And you know what?
When it got
The fastest 15 minutes trading is up. So Just remember, it's not what you trade, it's how you trade it. So go out there and trade the banks. This is the Rumpled One, over and out.